All right, ladies and gentlemen. Very good evening, and thanks for tuning in. If you are tuning in on a Friday evening, wherever you are, maybe it's Friday morning if you're watching from the US, but I guess for most people it will be towards the later part of the evening. Instead of watching Netflix on the couch or going out with the guys to the pub drinking, and you're watching this channel, well then kudos to you. It seems you're taking serious the topic of finance and investing. So I appreciate you for sticking around. Probably not the most ideal time, but I thought I'll do it anyways, because a lot has happened in the markets, and I thought it would be nice to kind of go through. And more importantly, I also want to answer a bit of Q&A. I really want to focus on some of your questions. So feel free to already pop them in the comments. I'll afterwards go through as many as I can, answer as many as I possibly can. So yeah, let's dive in first into what's happening in the markets, and then obviously we get to your questions afterwards. So, I mean, let's kick things off. How else could it be with, of course, a bit of cryptocurrency, especially, Bitcoin has been on absolute fire in recent times. You can see just the last 30 days, we're up 33%, already outperforming the S&P 500 total returns for the year so far in just 1 month. So absolutely crazy results. The boring Bitcoin, right? A lot of people say Bitcoin is yesterday's news. It's boring. It's not exciting anymore. Well, if I look at those returns, I'm still very much excited, to be fair. And of course, the big news this week was that we have crossed, finally, for the first time ever, the 100K mark. That was a couple of days ago. I think at the peak, it was around 103,000. Let me pull this up over here. Maybe you can see it better. But yeah, we finally got there. Just about $103,000 for one Bitcoin, which is quite mind-boggling, right? Especially when you think that not so long ago, when we were, we pulled the 1 year chart over here in January, we're still at 41,000, right? If only we could go back in time, wouldn't we all buy more of it? But hey, it is what it is. But overall, definitely incredible performance. Of course, mostly driven, I would say, since Trump was elected, obviously, to the office. I made a whole video about sort of analysis, how we got to the 100K mark yesterday. So feel free to watch it afterwards. Obviously, quite a few factors. It's not. I never think there's one single factor. There's a lot of things coming together to sort of make the perfect storm. But definitely one of them is, of course, being with Trump coming into office in January next year, and very favorable crypto policies being expected. And he already said that, right? I think the biggest potential trigger that could further drive the price upwards, because the question is, where do we go from here? Is that it? Where's the price going forward? I personally think the biggest catalyst is obviously more favorable crypto laws coming out that just makes it more favorable in general for the industry, more clearer regulation, because in the past the SEC, the regulating sort of organization in the US for mostly stock markets, but also a bit of cryptocurrency, has been quite negatively towards cryptocurrency. And now the potential new appointments that Trump already came out with for the SEC and other organizations are very much pro-crypto people in there. And that will obviously bring a lot of new excitement to the markets and more positive regulation, which should in turn, bring prices up even further. I think the biggest potential catalyst for the price going up, for Bitcoin especially, is if the US would actually eventually really come out and say that Bitcoin will be part of the central bank's reserves. Now, he alluded to it. He hasn't said he will do that, because that would be a bold statement. And actually also interesting, today I was listening to a podcast. If he was to do that, right, if he would come out right now, even before being in office, and say that the central bank will adopt at least a percentage, you wouldn't turn all your reserves into Bitcoin. But obviously banks, they have dollars, they have gold and other assets that they sort of have to keep as a reserve. But if even a fraction of that was to be turned either into Bitcoin, or they acquire Bitcoin to have it there, that'd be huge impetus, and other central banks around the world would also follow accordingly. And there would be a real race for who can get the most Bitcoin, right? So if he was to come out now and say that, well, guess what? A lot of other countries and potentially even companies would front run the US, meaning they would buy up as much as Bitcoin as they can right now, knowing that the US will eventually have to pay a higher price for it, which will drive up the price for everyone in the markets, which, would be good for those who bought earlier, right? So there's already sayings that quite a few countries are not officially saying that they're buying, but they have been buying quite a bit. I believe recently, I think Bhutan, it's funny, it's actually a tiny little, well, not that small, but rather unknown country. They have been acquiring quite a large portion of Bitcoin. While, for example, the German government recently sold 50,000 Bitcoin itself, which has a value of billions, right? So if now the US was to come out and say, we make Bitcoin a central reserve asset, well, guess what will happen to the price? So again, nobody knows what will happen to the future of the price of Bitcoin. There have been crazy estimates of millions, right? Michael Saylor recently came out saying it will hit eventually 13 million, I think he said by 2045. I don't know, nobody does, but will it hit $200,000 sometime soon? I bet my house on it, 100%. And that's why I'm not selling. I know a lot of people are taking profit at the 100K mark, and that's why it was so long until we finally broke the limit of 100K, but because a lot of people actually took profit, right? When it came to that number closer, they maybe had a sell order at 98,000, 98, 99,000, and now we broke through. And I think mentally, once we hit it once, that's already a new all-time high, right? So now, what's next, right? So I think people are ready to see Bitcoin at 150K, 200K. And while 200K seems like a lot, right? When you think in terms, in real money terms, 200,000 versus 100,000, but actually it's just 2x from here, right? It's doubling the return on your investment, which does seem doable, if you ask me. And I think the interesting thing of Bitcoin is the higher the price gets, the lesser the risk in a certain way, because it becomes more accepted by people around the world. In the beginning, when it was, jumping around, 5,000, 15,000, 20,000, then back to 5,000, it was extremely volatile, meaning you could make a lot of money, right? You can do still with some meme coins and altcoins, but there was a high risk. So pension funds, institutional monies, ETFs would never put so much money in there because it's too volatile, meaning price swings are huge. The more valuable it becomes, the odds of it dropping by 50, 60% become less and less likely, because actually there's so much demand and people are so excited to acquire more of it for long-term growth that even if there was to be a drop and a sell-off by some, well, guess what? Others would happily buy up that drop at a lower price. So I think that panic selling, that everybody at the same time, institutions, retail, whatever, all jumps out at the same time, I think it's just less and less likely. And that's good for the long-term value proposition of Bitcoin. Now, that also means that we're probably not going to see 100x from the price we have now, right? That'll be highly unlikely, at least in the coming 10, 15 years, maybe 20, 30 years down the road, who knows? But I don't think we're going to see 100x anytime soon. But a 2x, 3x, I honestly wouldn't be surprised if we see that even in the next bull run, or at least within the Trump administration. If he really comes out with half the things he said he would do, I think it will be extremely favorable for it. Again, you all have to do your own research, but I feel very bullish in it, to a fact that I've actually now recently sold a little bit and trimmed some of my ETF holdings. I'll probably make a separate video about this, but I pulled some of the funds, not all. I mean, majority I still keep in there, but just a little bit to dollar cost average more into my Bitcoin position, because I do believe that over the next year or so, it will definitely outperform, at least my Bitcoin holding, the S&P 500 holding. Again, I may be wrong, but I have a pretty good feeling for it, especially considering that where we are right now, also in the markets with the various indices, right? When we look at the S&P 500, let me pull it up over here 1 second. I mean, the gains we've seen so far are just mind-boggling. Look at this, where we are on the 6 months chart. Okay, fine, 6 months. Let's say 1 year. On the 1 year, we are up 33% on the S&P 500, which should be boring investing, right? We say on average it grows 8 to 10%. We are up 33% in 11 months. This is absolutely crazy numbers. So I already feel a little bit like the peak is in there, while I do believe there is still more room to grow in Bitcoin. Again, that's a personal choice. I will definitely continue to dollar cost average into both. So probably what I'll do is on a weekly basis, make, for time being, I would say a 50-50 split. Half of it goes into my ETFs, and in that I will probably split it 60-40, 60% into the S&P 500 and 40% in the Nasdaq 100, and the other 50% of my weekly investment amount will flow into Bitcoin. I will just dollar cost average, and you could say that right now the price, of course, is very high. But look, once again, let me show you the chart of the Michael Saylor tracker. Obviously, he is a real legend. I believe by now you're familiar with him. He's a real genius, I would say. Well, guess what? Look at the prices he most recently bought. He bought at 97,000. He bought 55,000 Bitcoin, right? A value of $5.4 billion. I mean, just crazy numbers. And then most recently, December 2nd, slightly lower price, but still 95,000. People say, are you crazy? Buying at all-time highs. He bought another 15,400 Bitcoin worth $1.5 billion worth of Bitcoin. I mean, just crazy numbers. And it just shows you, because you see on the chart, that's whenever he buys, nobody knows, right? Is it going to go up from here? If that was to double in the next few months to 200,000, well, guess what? He would turn 1.5 billion into 3 billion with 1.5 billion profit within a year. So again, I mean, I'm not counting that it will double in the next year. Maybe it will take 2 years. But again, looking at the S&P 500 on average, as I said, let's assume it grows by 10%. If it does grow on average 10%, that would mean that it takes around 7 years for my money to double. Now, I believe I can double my money faster with Bitcoin. Obviously, I'm not 100% convinced in that. That's why I'm not pulling. Otherwise, I would be pulling out all my ETFs, sell everything, and put all in Bitcoin. I don't think that would be very wise. That's why I'm not doing that. I already have quite a high exposure to Bitcoin. But I'm still young, I have good income, and then I can afford to take more risk in a way to potentially have higher rewards. I don't think Bitcoin will go to zero, for sure not. But I also don't think we see major corrections like we've seen in the past. There will be along the way, there will be times of bigger drawbacks, but I don't think we're going to see a 70% pullback. But again, I may be wrong, but that's just my opinion on that. What else? Yeah, as I said, we just had obviously crazy times also in the Wall Street. I mean, with the stocks continuing to grow, it just doesn't seem to know any stop. I mean, all-time high after all-time high. But really interesting when you look at that over here, the valuations, comparing the average valuation of the S&P 500 to the MSCI World without US, and you can see basically it means that's the forward price to earnings ratio. So sort of the multiple on the price you pay, and you can see how expensive it is. Basically, it means it's overvalued in many ways, right? And the question is, how much more overvalued can it become before it will reset? And again, given that we're in a year already up over 30% in such a technically boring investment class, well, begs the question, again, how much further can it grow, right? And I'm not panicking. I will still continue to invest. And even if we drop, I will continue to dollar cost average. That's just something I set and forget it over the long term. If it drops, I will get more shares for my money. And if it continues to climb, well, my portfolio will do better. So it's win-win. But what I am saying, maybe it's time to take a little bit of the profits I made so far and just reallocate right now into Bitcoin, where I do see slightly higher growth potential in the coming years. Very interesting. Also, I thought that was interesting. Obviously, NASDAQ, what I invest as well, NASDAQ 100, the S&P 500, all up, except for Dow Jones, which has been pulled down by United Health. If I pull up United Health over here, obviously, if you read the news, quite unfortunate what happened. United Health. 1 second. All right, here we got. You might have seen in the news that unfortunately the CEO was shot basically in the US, and well, you can imagine what happened to the stock price immediately, literally right after it tanked, right? So anyone who invested in them, I think a really solid company over the years, as you can see, has done tremendously well. But yeah, that really bad scenario really pulled down. And once again, obviously I feel for shareholders in United Health and of course the family of the CEO and so forth. But again, it's just for me, once again, it shows how difficult it is to invest in individual shares, because you can do all the analysis right, and really feel comfortable with the company, run your numbers and so forth. And it really looks like a well-oiled machine. I mean, no doubt about it. But then events like these happen, right, that trigger a lot of fear in the markets. People move out, they panic, and they sell out of it. And there's no fault at your own, right? You've done all the research, you invest in a great company, but these things happen, right? Now, long term, I think they will definitely recover, right? These things happen, sadly, well, hopefully not too much in like such a case we had, but there will always be certain PR disasters, what have you. But long term, I think if you still have a solid company, you're going to be in good hands. But that just shows me, once again, if I invest into the S&P 500 or NASDAQ 100, I diversify, because I don't have to worry about one individual company doing better or worse. On the contrary, if it does better, which, for example, Palantir did, a company I used to own, I think I bought it, my financial advisor barking here. Yeah, not that. I used to buy it when it was back here, not so long ago at $7-8. And well, you could say I definitely missed out on a nice price increase here, but it is what it is. It is, sorry, some fireworks here, so Madame is going a little bit crazy. Wow, okay, always something happening in Dubai. Anyway, you can see for the year to date, we are up 322%. Absolutely crazy numbers. So yeah, you could say I missed the ride, and certainly I have, but I'm not feeling too bad about it, because ultimately I still benefited as they joined, obviously recently, those indexes, and they have further pushed the price up as well. So yeah, and when you look at it right now, of all the analysts, most of them are saying sell. So of course it's objective, very personal opinion. I kind of take it with a grain of salt, but I would also imagine that it is a little bit overvalued right now. But again, I'm not investing anymore in individual companies, but it shows if you do pick a winner, you can make great money, but you can also very easily pick a loser and lose quite a bit of money, which I did in the past as well. Let me pull up PayPal, a company that I luckily did not invest in, but they definitely had a rough time. They recovered a little bit now, but look, on the 5-year chart, over a 5-year period, we're still down 14%, which is... quite loud. Hope it's not too loud for you guys. But yeah, we're still down 14%, right? And it just shows it's really tough to pick the winner. And often you see those YouTubers or other people online, you know, they show you all the winners, the great stocks that they picked and how genius they are. But often they fail to show you the ones that didn't do too well, right? So that's also something to consider, obviously, when you look closely. Yes, what else I wanted to show you guys? Yeah, of course, let's quickly have a look also at the markets overall. What's happening here, some of the most traded stocks. We have, of course, Nvidia down quite a bit, 2%. But again, they have been doing rather well. Tesla, again, is such a volatile stock, right? I mean, people say Bitcoin is hot. I mean, for me, Tesla generally feels hotter and more risky than investing in Bitcoin. And I know long term where Bitcoin is going to be, I don't know that about Tesla. Now, I'm sure it's going to go slightly higher, but the market cap right now is already $1.19 trillion, which is huge. So my question is, how much further it can go? Yes, over year to date, we are up 50%. But again, if I zoom out further, over 1 year period, well, still 50%. So, but it's just an extremely volatile stock, which... yeah, again, I don't know if I would feel comfortable investing my money in there, because it can go either way, depending on how the regulations are, the future. Oh my God, that's insane. Wow, sad I missed that. I didn't know there's a fireworks going on today, but yeah, hopefully it's not too loud for you guys. But yeah, anyways, very, very interesting company. But honestly, kudos to those who invested many years ago. It has done certainly well. One company that is just keeps on growing like crazy is, of course, MicroStrategy. So that was the gentleman I showed you before. It's run by Michael Saylor. And they even outperforming Bitcoin, which is just fascinating to see. You see, year to date, we are up 535%. Absolutely crazy. And basically, it's very interesting. It's the first time I really see companies using their balance sheet as a financial instrument, right? Usually we talk about companies, about their revenues and the profits, right? Increase the revenues and decrease the expenses to maximize your profits, right? And then you're profitable, investors like that, and hopefully invest more money in them, brings the company stock higher. Now, he kind of started acquiring Bitcoin a couple of years ago, and now even to a point where it's mostly, you could say, a Bitcoin company, right? I mean, they do still sell software and so forth, but I think a lot of investors invest to get exposure to Bitcoin. In a way, you could say it's a better Bitcoin ETF than just investing with a BlackRock, for example, into an ETF of Bitcoin. That way, he basically borrows against his own balance sheet, if you want, of Bitcoin. He borrows against it and uses that money to acquire more Bitcoin. And it's kind of like an infinite money loop in a way. And obviously that drives up the valuation even further, because right now I think the market value, you can see the market cap is 86 billion. Okay, 86 billion. And well, in total he has 40 billion market. He holds 40 billion worth of Bitcoin. So the company is worth twice what they actually have in assets. Now, you could argue that obviously the software part has a certain valuation, but it's certainly not worth 40 billion from what people say. So yeah, it just shows you the future potential price increase of Bitcoin is already priced into the share price of MicroStrategy. So again, for me, it would certainly be too hot. I think we've seen already a major rally. I don't think it's going to continue like that forever. But if you invested early, well, kudos to you. You got a nice return there for sure. Right, what else we have here on some of the more traded ones? I think I've seen an interesting one. Lululemon. Look at Lululemon. I mean, what happened here? Well, year to date, we're down massively. But for the week, I think we've seen a major increase, 26%. What is that? They must have come out with the earnings. Why is Lululemon moving today? Lululemon shares are trading high after the company reported better than expected Q3 financial results. Well, there you go. It's so funny. Sometimes these results, even you overachieve, you're still going to be punished on the stock price. But in this case, for Lululemon owners and shareholders, finally some reprieve in the stock price, even though, year to date, we're still down massively. And well, certainly not a company I'll be investing in. I've been to the stores. They have some stores here also in Dubai. I personally find that overpriced. And investing in a fashion brand, what's the longevity, right? I'm a future investor into the future. And, while clothing will always be around, I don't think it's going to revolutionize our world and shape our world in the future. That's why I like tech, right? Because tech is here to stay. It's only going to get more prevalent. So I certainly wouldn't be investing in Lululemon. I think they're not even paying particularly nice dividend. So but well, if you just invested recently and you want to do a bit of trading, then you certainly made a bit of money on that trade. Let's quickly also see the indices over here and see what's happening over there. Let's pull it up. And I'll get to the questions in a second, guys. I haven't looked at them yet. I don't know why it doesn't load. That's not good. Fireworks disturbed my internet here. Somehow, I don't know why it doesn't pull it up over here, but all right, that's fine. Quick look also at the total assets by market cap. I think that's always interesting to keep an eye on that. We know, obviously, now with the increase in Bitcoin price, it's now the 7th most valuable asset in the world. And I'm of the strong opinion that as Bitcoin price continues to climb and in general more money flows into cryptocurrency, well, it has to come out of somewhere, right? There's still going to be more money being printed, that's for sure. But I think it's going to come a little bit out of gold. Like some people will definitely have a bigger allocation. And, back in the days, people used to say, okay, you put, 60% in stocks, 30% into bonds, 10% into gold. These times, nobody would say that anymore. I mean, I don't hear any money managers anymore really recommending bonds. Like bonds seem to be slowly on the way out. I don't buy bonds, and I don't think many young people buying bonds. So they're becoming less and less interesting and relevant. So then obviously people go with individual shares, they go with some ETF exposure. They might still have a bit of gold in there if you're a bit more conservative or concerned about inflation and so forth, right? But I think, while in the beginning people said maybe I have 1%, 2% exposure to Bitcoin, that number is definitely going to get higher. Now, nobody is going to tell you to have 20%, 30% of your portfolio in Bitcoin. That might be a bit too aggressive, but at least 5% or 10% of people's portfolio to have some exposure to Bitcoin, to future-proof yourself, will massively put buying pressure on Bitcoin and therefore drive the price up. And at the same time, as people offload some of their gold potentially to shift into Bitcoin and other assets, I think that will definitely impact the market cap. And I said it here, the internet doesn't forget, but I honestly think that eventually in our lifetime, we'll definitely see Bitcoin flipping gold. I don't think that in 20 years, gold is still going to be the most valuable asset in the world, but that's just my humble opinion. Let's see who turns out to be right or wrong. But that's obviously why I put my money where my mouth is and invest more of it into the ETFs, meaning those companies, all those companies you see over here, because I think companies will always have value, right? I don't know which company is winning. That's why I invest into an ETF, because I want to capitalize on all of them. Whoever's the winner, I will win because investing into an ETF. And of course, Bitcoin as the sort of main driver of digital wealth in the future, I think is here to stay, no doubt about that. And one thing also I was thinking about is that, people ask me, how much cash should I have, right? And, in the past, when we just came out of 2020, 21, 22, all these difficult times, I would have had a bigger cash allocation. I had it myself as well, because you don't know what's going to happen, right? Maybe people get laid off. Maybe you're not going to have any income for a while. So you want to sit on cash, right? If you fully invested, the markets go down and then you need some money for an emergency, whatever, you sell at a loss, you materialize the loss. That's painful. You don't want to be doing that. But right now, interest rates are coming down, meaning you're actually getting less on your cash. And actually your cash is probably the one asset where you know it's going to be losing money because governments around the world will keep on printing more money. Inflation is real. So like it or not, but your cash is getting less by the day. You may not feel it because you put $1,000 in your bank account. Well, it's still $1,000 a year from now. Yes, but the purchasing power, what you can buy with that, is just less. You think the thing's getting more expensive, but that actually means your money becomes less valuable because you need more money now in the future to pay for goods. And that's why I personally don't think sitting on cash is particularly good. Now, you always probably need some sort of cash because, again, we need to pay for everyday lives, right? Rent, I can't pay my rent with my ETFs or my Bitcoin. Well, probably I could pay my rent with Bitcoin here in Dubai and some places, but I wouldn't want to do that because I believe that Bitcoin will appreciate in the future, right? If I now give half a Bitcoin for rent, let's say, I might really regret that 10 years from now. So I wouldn't want to do that. So in that way, you want to pay for everyday expenses with the weakest asset, technically, which I believe is cash. But you don't want to sit on too much. I do consultations, also speak to people, and I often feel they have too much cash. Now, you need to calculate how much you need for your everyday living, right? And some people say 6 to 12 months of your monthly living expenses. Now, you have to calculate it for yourself. Yours might be lower or higher than mine, but I always recommend know how much you spend in a month. That would be very good. And it might be 1 month higher, 1 month lower, but on average, you kind of should know, what's your outgoings, right? So have that number in mind and then multiply that. Let's say it's $2,000 times 6. So let's say 12K you want to have on the sideline. Some people feel more comfortable with 12 months. But to be fair, I think 12 months is really on the higher end. And even if you want to have a bit more, I would still think you might want to be, if you wanted to be a bit more adventurous, you could use some of those cash funds and move them, for example, what I do as well, into stable coins, right? Because there now I'm getting 9.5% interest. So what I do is, of the cash reserve that I have half of it in real cash where I know it's ready anytime I need it. Yes, I understand it loses money to inflation, but I need some, right? There's no way around it. Maybe also I see a great buying opportunity. I can buy some more Bitcoin if tomorrow the price drops massively and we go back to 50K. Sure, I will use some of my cash to buy even more than I would do on a weekly basis with my dollar cost averaging. But the other half of my emergency fund, I still have, it's slightly more risky, of course, on the exchange. I use Nexo for that. And I currently get there 9.5% interest. So there I definitely outperform inflation. And then some, right? I actually make money on my cash. So yeah, certainly it's more risky, but at the same time, I put my cash to work. So I may not recommend it for everyone, but that's something for you to consider because I think right now sitting on too much cash may not help you. And I've seen, all the prices, wherever you put your money in recent times, we are up across the board, right? Whatever you invested since the beginning of the year, in most asset classes that you invested, even gold and all of those, you are up massively that year alone. So if you were sitting on the sidelines waiting for the markets to drip to fall, as they said since the beginning of the year, end of last year, I've seen all those YouTubers, recession is coming, rescue, sell everything, get out of the markets. Well, guess what? It's been one of the best years ever in the stock market. So you will have missed out on these crazy gains. So yeah, that's again what I would recommend, not to sit on too much cash, but of course also don't go all in. I see some people, they invest every single penny that they earn with the right intentions, but again, life happens, right? There might be an emergency fund or something happens where you do need cash, and selling when you need to sell it often materializes the loss if there is something, and that's probably the worst time. You don't want to be forced to sell. If you consciously sell, like I'm right now, taking some of my profits from my ETFs and reallocating them into Bitcoin, fine. But if you're forced to sell just to have cash to pay for everyday expenses or your rent, that's probably not the best way to go about that. Right, let me see once more. Yes, okay, now we have the indices, and then we can jump to Q&A afterwards. So here, obviously, we just have a bit of a global overview of what's happening across the markets for the week. That is Russell 2000 down, actually. That's surprising. S&P 500, once again, up 1.2%. The Nikkei in Japan, that's the average. These are the top stocks in Japan, up 2.7%, even though they had a rough year as well. We have, of course, Dow Jones down. We spoke about it because of United Health pulling it down mostly. FTSE 100, UK, slightly up. NASDAQ 100 in 1 week up 3.66%. May not sound a lot, but in 1 week, that's huge. As I said to you in the past, we spoke about annual return of 8 to 10%. So in 1 week, almost half of the annual returns. Crazy. So you could really say that potentially the top is in. I don't know. We may still continue to grow from here, right? We keep on reaching new all-time highs all the time. But that's why I decided to take a little bit of some profits from both NASDAQ and S&P and just reallocate a little bit into Bitcoin. But yeah, the European markets are up, even though they had a rough last few weeks. So I think they had to recover a little bit to catch up with the US. But generally across the year, they have been trailing definitely the US, which continues to be the strongest market to invest in. The Germans also doing a little bit better, which is good. Nice to see. Even though, yeah, being a German myself, as much as I would like to invest in German markets, I just don't see any company that really strikes me as particularly innovative or future-proof. So yeah, I will stick with the US companies for time being. Alrighty, with this, let's have a look if we have any questions in here. Okay, we have Ricardo from Portugal. Nice to see the Portuguese crew as always. So nice to have quite a few of you here. So that's cool. Don't understand why Europe, even Canada, isn't following US and buy BTC. Gopian, not sure what you mean by that, but I agree that buying Bitcoin is certainly a good decision. We hit 100K again today, yep, and we're gonna hit it a few more times. I think it will just kind of shift around that price, but I think now that we hit it once, I think it's not gonna surprise people anymore. So even if you go from 100 to 110, it's still a 10% increase, but it just doesn't seem so massively anymore, right? You won't see crazy news around the world when it does. I think the next time we read it is probably at 150K or eventually at 200,000. People will again make news, which is good, right? It shouldn't be every day in the news. I think it already draws in so much attention and new investors and institutional money. That's much more important. Retail is great, but institutional buyers, company buying, central banks buying, that's really gonna be the main price driver going forward. You said day trading is not profitable long term, but what about picking individual stocks and put sell options, covered options? Look, I mean, I'm not saying it can't be profitable, right? Wall Street is pretty much doing that exactly, but they are professional investors who use the latest technology, algorithms, whatever. They have the brightest minds from around the world paying them really handsomely to get the best results for the company, day trading and so forth. You can make money. I'm not saying you can't. I mean, technically, if you sell and buy at the right time, you make money. It's just what are the odds that you, from your computer at home, somewhere in the world, outperform and outsmart the market at scale on the long term? I just find them very slim, right? It's the same with going to the casino. You can win, yeah. Even though the odds are against you, there might be times when you win every night, right? It can happen. But I just realized that I don't want to spend that much time to follow the markets. I want to focus on making more money and create content and build more businesses and so forth and invest conservatively rather than spending all my day in front of the screen and trying to outsmart Wall Street. So again, it may happen. If you want to do that, I think it's possible. It's just not for me, right? The same way how I don't invest in gold and some people like gold and that's totally fine. That's why I always believe in educating about all things finance and you have to pick what works for you. What works for you may not work for me and vice versa. Enric is asking, do you believe Nvidia will go up also next year? Yeah, I mean, I wouldn't be surprised. I would not see that Nvidia will massively drop or correct. Now, will that growth continue the way it did in the past? Unlikely, I would say, because it's been really crazy rally already. And interestingly enough, I was just listening to another podcast where they said, even people who don't like Bitcoin, there's still people out there who don't like Bitcoin, but don't believe in it and scam, and it's totally fine, right? I'm not here to convince anyone to invest in Bitcoin. But even companies like Nvidia, technically, if you invest in them, you do have an exposure to Bitcoin because they actually produce a lot of the chips that drive the Bitcoin mining frenzy, right? And are a big part of Bitcoin industry at large. So in a way, they still benefit from the Bitcoin craze, but of course also all the AI chips and so forth. Even though obviously now I think Amazon is coming out with their own sort of AI chips that they're developing, more and more companies. because they pay huge amounts to Nvidia for those chips, will eventually, understand that it might be cheaper developing their own ones in-house eventually, rather than paying Nvidia. But still, I don't think that there's going to be a major correction for Nvidia in the future. But yeah, will they 10x or even triple in price next year? I just don't think that's gonna happen. Tanish asking, how much of my portfolio should I assign to crypto? Is 20% okay? Honestly, that's really a question a lot of people ask, and it's so subjective and depends on so many things, right? It depends on your age, right? If you're really early on, just starting off, you could be more aggressive. You could have 50% potentially in your portfolio, right? If you are close to retirement, then maybe you want to have a bit of less crypto exposure, because ideally, obviously going to the retirement, you want to have a bit more predictable portfolio growth, right? Maybe a boring S&P 500 at 10% a year might be better than, when you're 70 and put all your money in Bitcoin, it may be too risky, because it might be dropping by quite a bit percentage. So I think 20% generally, again, not knowing your background, seems like a fair number. My personal exposure is even higher. It would be actually interesting to see the percentage now that it increased so much. But if I consider my real estate, which is my biggest holding right now, let me calculate. Well, actually, I'll be around 25%. So fairly similar to that. But would I mind having it at 35%? No, I'll be fine with that as well. And probably it will get there if it continues to outperform also my real estate, which I'm sure it did in terms of total percentage returns. It might get even more as a percentage in the future, and I wouldn't mind. Now, I wouldn't want to have 80% of my holding in Bitcoin. I think that would be too risky even for me. But up to 30%, I would feel very comfortable with that. Definitely. Nvidia went 3 times. I think if that's the number, I don't know by heart, but certainly a crazy success story they've been having. So again, the question is, how much longer is that sustainable? And they will certainly continue to grow, but will they 3x next year? If I go back to the assets over here, Nvidia is now at 3.5 trillion. If it was to double, it would be at, 7 trillion. I mean, it would make it twice as valuable as Apple. With all due respect to a great company, I just don't see that. Maybe in a few years from now, but not that soon. That's just my thoughts on that. But let's see. We shall see what will happen there. We have another one. As a resident of Norway, should I open Interactive Brokers UK entity or Ireland? I want to keep my base currency euro, but holds by $5. Honestly, I think you don't really have a chance. Like, it's not up to you, because usually what happens is that Interactive Brokers assigns you to an entity, so you don't get really to choose. So if you're in Norway, I don't know under which entity it falls. I would imagine it would be under Ireland, but again, I have no idea. So as soon as you open an account, you will be allocated by Interactive Brokers, because they sort of already pre-assign every country to an entity. But you can still have a base currency to euro. You can set it in your settings. You can set it to dollars or euros, up to you. And even then, you can still buy SPY 5 in dollars. So that's what I do as well. The S&P 500 ETF from State Street, which is the cheapest you can possibly buy. I really like it. And so that's honestly, it doesn't matter on if you assign to either UK or Ireland, you can still do that, which is the beauty of Interactive Brokers. And the cool thing also recently, as I moved from Europe to the UAE, it was so nice that I could change my Interactive Brokers account and the actual entity to my new residence, which was another entity, right, based in the Middle East and the UAE, where they have an office now. And it was literally at an instant, right? Next day, my account was shifted from Lithuania to UAE. I didn't have to sell my shares and stocks, which most other brokers will make you do, even though it's the same broker and they're available in the other country. They will still ask you to sell your shares, which is so painful, because then in many countries, it's a taxable event. You lose all your track record. It's just painful to do that. So that's another huge benefit of Interactive Brokers, obviously. Okay, you probably know about long S&P recovering periods, like after Great Depression. Everyone recommended to put all in S&P, but war is not imaginable. Maybe unimaginable. You mean not imaginable? I don't know what you mean, but maybe not unimaginable, because obviously we have a lot of hotspots around the world, and again, nobody can predict the future, right? So what's the alternative? You could either sit on the sidelines, as I said before, hoard all your cash, and wait for things to happen. And well, maybe they will happen, but then what do, right? You're still going to wait on the sidelines until it's over and then maybe reinvest. But you would have lost so much momentum in the times leading up to it. And even if something bad was to happen, as we had a couple of years ago, we had financial crisis 2008, 2009, we had COVID not so long ago. So many things do happen along the way, and they will continue to happen. But not being invested is the worst thing you can do, because you're going to be losing out big time. So yeah, that's why I'm a huge fan of just dollar cost averaging over time into assets that you understand and see long-term price appreciation, because that's what you can control. Earning more, investing more regularly. What will happen to the world, nobody can control, but your regular investments, that's fully within your control. And over time, we've seen time and time again, it will just outperform. And as you said, even after Great Depression, still, if you would have held on to your S&P holdings, you would still be in the plus. And times always, get better and stronger there. Luke, nice to hear from you. I have 30k euros I want to invest. Very nice, good amount. Should I get to work straight away or dollar cost average over the next 3-6 months? Great question. Obviously, it depends on what you're planning to invest in. If you were to invest into Bitcoin, for example, all of it, let's say, right, hypothetically, which I probably wouldn't recommend you to invest all of it into Bitcoin, but let's say, in this case, I would probably not recommend you to invest all of it right now because, as I said, while I do believe it's going to go up in the coming month, I still think we're going to see price corrections along the way, right? Just a few days ago, we were at 103,000. Today, I think at the lowest, we're already at 97,000. So you could have capitalized on that little dip if you had some money. If you would have put it all when it was 103,000, well, you wouldn't have any more money to invest now. So I think still Bitcoin obviously is quite volatile. The same with the S&P 500. You could say that we just reached another new all-time high. So putting it all in right now may not be the smartest move. But then again, we hit already, recently I read somewhere, I think 52 all-time highs this year alone in the S&P 500. So crazy, right? We go from all-time high to all-time high. So even though, having said all that, and that's what I'm doing as well, as I just said, I kind of cashed out a little bit of my ETF. And I'm not dumping all of it on the same day into Bitcoin. I will just stretch it out. Now, maybe 6 months is a little bit too long. 30K, you could say, if you want to invest weekly, which probably makes the most sense. I really like weekly dollar cost averaging. I don't know, everybody talks about monthly, but I just think if you invest monthly, it's very difficult. Or let's say your chance of timing it right is more, it's less likely, right? Because on that day when you invest, on that Monday, on the first day of the new month, it might be a new all-time high and you buying at the peak, right? Versus next week, it might be significantly less that whatever stock you want to buy or crypto you want to buy. So I really like buying every single week. You can automate it also if you don't want to remind it. Remember doing it manually. You can set it up in many brokers these days or exchanges and dollar cost average every single week. So I would probably, 30K, again, depending on what you plan to invest in, split it up into maximum 3 months, I would say. Because obviously we're going to see quite a bit of price movement in January when Trump comes to office. So you still have the whole December, which generally is quite active months as well. January is going to be quite active. And then obviously you still have February, which starts to kind of bottom off a bit. So I think, 6 months might be a bit of too long of a stretch. You might be missing out time in the market. I think, 3 months is a fair period for sure. Paul, what do you think about Palantir long term? Well, it's an interesting company. It's very people like it or don't like it, right? Because obviously what they do, it's military. It's a lot of things where people think it's invading privacy of the citizens. They're working with police around the world. It's a quite controversial company in many ways. But at the same time, they are so intertwined with so many companies and countries, right? They're dealing with presidents, head of states of companies. They have so much knowledge and insights. It's almost hard to get rid of them. It's like Microsoft, right? Once you're in the system, it's almost hard to escape it. So I really think long term they're gonna do definitely even better. Now the value is, I think, 1.5 trillion. So still less than half of what a company like Microsoft is worth. So I still see some nice appreciation. Right now, I think the gain in recent times has been a little bit too fast. So I wouldn't right now put too much of my money into it, because I think we've seen a major rally already. So there might be a bit of cooling off. But long term, I think it's going to do really well. If I had to pick one of individual companies, I think it would be one of the ones. I'm not investing in individual companies, but if I was to pick one, I think Palantir for me would be definitely one of the picks to consider for sure. Hi, as a European, I want to start investing. Where should I begin? Bulgaria. Start watching some of my videos. I made a number of them. I think there's some really cool brokers out there, especially in Europe now. In the past, we only had, in the US, mostly those commission-free brokers like Robinhood and so forth. But now in Europe, we have amazing choices like Lightyear, Trading 212. I think those two are for beginners really perfect, because Interactive Brokers is an amazing broker platform, but it's a bit overwhelming, especially if you're a beginner. I would not recommend you. So either go with Lightyear or Trading 212. I do have some links down below where you get a welcome bonus as well. And then obviously I made a number of videos on the topic as well. Really start buying a single ETF. Just put 10 euros. That's the beauty of fractional ETFs and fractional stocks. People think investing is scary and you have to put a lot of money. You don't. You can literally buy an S&P 500 ETF with $10. I think as little as €1 you can even buy without commissions, and just get your feet wet, right? Let it sit there. Sleep over it. 1 night, 2 nights, a week. Put a bit more. See how it goes up. See how it goes down. How comfortable you feel with it. And then you can add to your positions. And then you start understanding what you like, what you don't like. Maybe you like dividend stocks, right? A lot of people like dividends. That's amazing. I used to do as well, until I realized I prefer total gains rather than just dividend gains. But that's a topic for another video. But I think there's some amazing options out there. And in fact, I think Trading 212 originated from Bulgaria. So that's something to keep in mind there as well, even though they're now UK based. But I think originally, if I'm not mistaken, they are from there. Lipos, hi Kai, getting bullish on Ethereum at the moment. Seems like Bitcoin will go up again soon, but won't buy more of it as I'm feeling pleased. Also, what about SUI and HBAR? Well, look, I'm sure usually people say, let me pull this up right here. There was a cool overview on the, 1 second. This one, if I pull out that one. I hope you can see it. Yeah. So now, people say that obviously Bitcoin is the clear leader, right? It sort of sets the precedence for the rest of the market. I mean, there's a Bitcoin dominance of all cryptocurrency in the world, which right now has a total market value of 3.7 trillion. So all of the crypto added together, all the coins has 3.7 trillion. Of that, 54% comes from Bitcoin. So it's a massive, massive driver, right? It sets the tone for the rest of the markets. If Bitcoin does well, the markets eventually follow. If Bitcoin is going down, the rest of the markets struggle. And obviously, since we've seen such a major drive in Bitcoin price in recent times, that's why people say we are now in the altcoin season, right? Because usually they trail Bitcoin price. First Bitcoin goes up, and then we've seen the altcoins and meme coins and what have you. So honestly, I wouldn't be surprised if we see some of the other stocks catching up a lot, even though, Ethereum kept par over the last, but when you look, for example, year to date, so we have Bitcoin up 140% and Ethereum up only half that, right? So that's a major difference. So that's why some people speculate that now it's time for Ethereum and others to follow. Now, again, it may or may not happen. I'm personally not the biggest fan of Ethereum. I don't like it as a transaction token. I tried a few times to send some around. It's super expensive. It's slow. I understand that they're obviously building layer 2s and so on, other applications. But I just don't like that there's also an infinite amount of it. So personally, I just don't use Ethereum much, and I would not invest my own money. Can I see that the price for it will increase quicker than Bitcoin will in the coming months? Yeah, potentially. But still, I want to invest in things that I understand. And the same when you ask me for SUI, where the SUI, everybody seems to be very excited about this one. I haven't really followed what it does, what it's all about. It's now the 18th biggest coin. It actually had already a major gain when you see for the year to date up 443%, so significantly outperformed Bitcoin. Can it double that? I don't know. But again, you have to feel comfortable with what you feel comfortable with, right? I mean, for me, if I double my money with Bitcoin in next year, I'm more than happy with this. I don't have to 10x my money anymore, right? I tried it a few times. I did some meme coin trading. It went well until it didn't, and I lost a lot of money. So I learned my lesson, and I'm not trying to, seek some crazy performance. And even the other stock you said, HBAR, again, I'm not so familiar with, so I can't really make any comments there. But can I see altcoins stepping up now that the sort of maybe Bitcoin excitement, euphoria is maybe slowing down a little bit? Yeah, sure. Usually that's what happens, because what ends up happening, people take the profits that they made with Bitcoin and then they want to double dip and reinvest those profits into some altcoin to make money with that again. May or may not happen, but I think, as I said, in general, with the crypto-friendly policies coming out of Washington from January, once Trump enters office, I think we will definitely see much more generally positive movements in prices across the crypto markets. So it's just a question of how much risk tolerant you are. So if you want to take a bit more risk or maybe have a smaller position in those, which does make sense, right? Maybe you want to say of all your crypto investments, which maybe are, let's say, 20% of your total portfolio, of that, 20%, maybe 80%, 70% are in Bitcoin. Then you have 20% in Ethereum, right? Makes sense. And then the rest, why not take some risky position? If you're young, you're willing to gamble a little bit, by all means, right? If it goes down to zero, your life is not going to change because you still have some solid other investments, but you have a potential upside, right? I mean, a 400x return on 2,000 euros, well, that's still a very nice, juicy monetary return. So why not, if it's something to consider? How do you expect Bitcoin to be on January 20 when he takes the office? Yeah, I mean, basically, as I mentioned at the beginning of the video, I think, I don't know if on the day, actually interesting what will happen on that day, but I don't think much will happen because obviously I think already a lot of it has been priced in, right? The excitement has already been in there. Even with his SEC appointments and so forth. So a lot of the sort of price action already occurred. Now on the first day of office, obviously he's not going to change all the rules, right? There's so many other things. People get too obsessed with his crypto regulations, but don't forget the president of the US has a lot of other things to deal with as well. So I don't think it's the first action when he comes to office to make some crypto-friendly regulations. It will be quite high up on his priority list because I think he already sees now how much that can make him popular and gain the confidence of the people, right? Because a lot of US citizens invest now into crypto and they will benefit from rising prices, right? So they're going to love the president, right? Whatever he does in other parts of the economy and whatever, healthcare and what have you, well, they see I invest money in the crypto markets, it goes up, I like the president, right? So yeah, I don't think on the first day that will happen, but as we start his term starting to shape up, the first few months, I still think there's going to be more and more action coming out, and I'm waiting for him or the SEC or whoever to come out and publicly announce that the central banks will make Bitcoin at least part of their reserves. Honestly, if that was happening, I think get ready for a major increase because that's just going to drive the price up through the roof. But let's see if that will happen. That'd be great. Miha, how you mentioned you have stablecoins with 9% interest. Can you tell us which one it is? Yeah, so I made a couple of videos around this already. You can check it afterwards. But basically, I buy USDT. So I convert my dollars into USDT, which is now, I can show you, the biggest stablecoin in the world and actually the third biggest crypto in the world. So you have Bitcoin, Ethereum, and then Tether. So it's a company called Tether, USDT. There's another one also, USDC. So that's the second biggest one. Both are great. That's a bit more US heavy. USDC, it's a bit more regulated, comes out of the US. So again, some people feel a bit more skeptical about it. That's why I think the most traded one is USDT. It's also the sort of the base that people trade other crypto with for whatever currency. It's, I think, the sort of the oil that makes the crypto markets go, I would say. So basically I switch and convert my dollars 1-to-1 with USDT, and then I keep it on Nexo, and I get 9.5% interest on that paid out to me daily. Now the interest is per year, but the payout is obviously a fraction of that every single day. And yeah, really happy with this. And the cool thing is, I'm super liquid, right? I'm not locked up because I never want to be locked up because, as I said, it's still, I consider it an emergency fund. So if I needed money for an emergency case or what have you, I can literally, with a click of a button, switch my USDT back into USD. The good thing is it doesn't fluctuate in price. Well, in theory, it hasn't done. Hopefully it won't. That's the risk you take. But generally, it has stayed 1-to-1. So I know if I have 5,000 USDT, it means I have $5,000. I literally convert it, and then I can withdraw it to my bank account and spend it with my card. So that's the beauty of it. And in the meantime, while it sits there, I get a nice juicy interest. So definitely something to consider if you have excess cash lying around. Palantir, we spoke about it in a second. What else we have? Okay, guys, quite a few questions here. I'm trying to see which one I haven't already answered. There's only one. What do you think about what do you think about oil investment with Trump and nuclear energy for data centers? Good question. If you asked me that before the election, I would have said maybe not the smartest move. But given his stance on oil and in general that energy sector, he's quite, anti-sustainable energy and renewable energy. I think it makes sense, especially nuclear. I think it's really interesting because now I believe even what I was reading, Google, one of those big tech companies, they're now developing their own mini nuclear reactors with another company that they basically build up next to data centers. I think it's going to be really huge. So we're moving away from these massive nuclear reactors to really sort of almost mobile ones that are really small but very efficient and effective, much safer, obviously. I think under Trump that could really boom. So if you wanted to invest in those individually, I would definitely consider probably nuclear more than oil. I'm just not an oil guy, but probably more into oil than into renewables right now. We've seen once he was elected, renewables took a major hit, while oil did rather well. If it's between oil and nuclear, I would definitely consider nuclear. I think it has an interesting and bright future ahead for sure. Waiting for the dip in the S&P 500 State Street and planning for a single purchase, $100,000. My goodness, wow, that's a nice amount of money you can invest there. Well done. What do? Have you invested anything of it, or are you sitting on cash there? I mean, that's a nice amount to invest. Should I buy for accumulating or dividend one, considering tax complications? Great question. And again, it really depends on where you live, because some countries, they don't differentiate. Actually, most countries don't differentiate between accumulating and distributing. So you're basically going to be taxed the same way. Whether you receive the dividend and do whatever you have to, you're still going to have to pay a tax on that. And if you have accumulating and the basically ETF provider buys more shares with your dividend that is not paid to you, but they buy more shares, you're still going to be taxed on that. Now, some countries, I understand, they have different taxation. So if you do have a more favorable taxation in your country for one versus the other, then there's no discussion even. Then go for it, right? But again, I cannot, sitting here, answer that question. Go on ChatGPT, have a quick Google, whatever it is, see if there's any difference. If there's none, then it comes down to personal preference. And, well, I just like the feeling of getting paid. Now, while technically it does make a difference, right? Because right now, as soon as I get a dividend, I reinvest it. So the long-term returns will be exactly the same. I just don't know. It's just psychologically nice when I see, you got paid, whatever, X amount of dollars, euros, whatever it is. It's just nice. It's a little reward. And then immediately I reinvest. And I also thought, well, obviously it's going to have to be a huge portfolio on the S&P 500 in the future, because you only get now, 1.1, 1.2% dividends. So even on $1 million portfolio, imagine you have $1 million worth of S&P 500 at 1%, that would be $10,000 in dividends in a year. Probably not enough to live off, but still a nice amount to maybe pay a holiday and so forth, without having to sell any shares. On the flip side, if it was accumulating, you would actually have to then, let's say, sell some of your shares, which I just find it so difficult, right? And imagine you are in that time when you need the money, you're in a down market, your stocks lost maybe 10, 15, 20%, which can happen, has happened, will happen. To then sell is painful. So then if you got the dividend instead, you don't have to sell any of your shares. You just take the cash that you got, instead of reinvesting it, you use it for yourself. So unless there's a taxation difference between the two, comes down to personal preference, and my preference is to get paid. That's what I like. James asking, best way for Europeans to earn stables with the new regulations coming in. Very interesting question. I mean, I should look more into this. Obviously, with the MiCA regulation coming in, it seems though I understand that also USDT, because right now they would technically probably be struggling or may not be allowed to operate in Europe. But from what I understood, they are now in talks with a Danish company or something to sort of get some regulation in the EU to be able to qualify and pass the MiCA rules. Again, I need to do a bit more homework on that, but it seems like obviously they know what's happening, right? They don't want to lose that market. It's very profitable for them. So they will do anything they can to still sort of pass those regulations, the requirements. But if you're really worried about that, in the meantime, you could obviously switch from USDT to USDC, which I believe does pass those regulations. It's slightly less interest, at least on Nexo, but minimal difference. It's not a huge difference. So if you want to be safe than sorry, you might want to do that as well, even though the beauty of it, it's so liquid, right? So I think we would definitely get an advance notice from Nexo or any other of the platforms, and that obviously you need to switch away from USDT if that was to happen. Nobody knows yet. So you would then very quickly be able to switch from USDT and switch all your money one-to-one to USDC. So again, I'm not too worried about it. I'll keep an eye on it, but right now I'm not really panicking about that. What else do we have here? Did you hear about Tether delisting in Coinbase because of European regulations? What do you think about it? I heard some rumors. Again, I haven't actually seen that happening. If that was to happen, of course, that would be quite alarming, but then again, I also understand that obviously Coinbase being a US listed stock exchange, there might be also some other motives behind that. Might be a little bit political also, that they want to push their own USDC, which from my understanding, the US government sort of has better control over. They can follow the payment flow and so on. That's why not everybody likes USDC. So might be also a bit of a political move there. I don't know. For time being, I will stick to USDT. If I saw that changing anytime soon, as I said, I will very quickly switch from one to the other. That's the beauty of it, right? Why do you only buy London Stock Exchange USD? Do you not trust European exchanges? No. I mean, absolutely. I think there's nothing wrong with European stock exchanges. In fact, I used to buy, when I bought the Vanguard S&P 500, I used to buy, I believe, in Amsterdam. I recommend for many also Frankfurt in Germany. It's just that, again, I buy in US dollars, and most of them are actually not listed on those European ones, right? Because they list most of them in euros. I do believe Switzerland sometimes does, but then I heard there's sometimes, there's less liquidity. That's also something to consider. You want to have a really liquid market where there's a lot of volume. That means you have lower spreads, the difference between the bid and the ask price. So the more volume and trade is going on an exchange, generally you tend to get better prices. But, it's minimal. I just happen to, use London for a while. It's in US dollars. It's established stock exchange. And I feel comfortable with it. But if my stock that I wanted to buy was listed in Amsterdam, as I said, or I think Italy, in Milano, or which is also in euros, or Germany, I would be totally fine. So that's really, all of those are really good exchanges for sure. Do you think Nasdaq 100 is the only ETF to own? Tech will no go anywhere anytime soon. I'm not sure what you mean. Tech will not go anywhere anytime soon. Again, not 100% what you mean, but no, there are different tech, even more tech-focused ETFs if you wanted to. I just think Nasdaq 100 is a good balance. It is mostly focused on tech. I think it's now 60% if I'm not mistaken, but there are still some other industries in there as well, and sectors. So I'm just, I understand it. I feel comfortable with it. It's one of the more, leading ETFs out there and indices. And so I'm happy with this. I have more tech exposure, and with the S&P 500, a bit more diversification, even though funnily enough, S&P is becoming more and more tech heavy as tech continues to do well. Obviously, it's a weighted index. So I don't know, in 10 years from now, if tech, completely dominates the markets, well, guess what? The S&P might be very similar to the Nasdaq 100 in many ways, because it's so dominated by tech eventually that the weighting is so strongly skewed towards tech that it's going to be very similar. But until that is the case, I will continue to use both of them, but still a bigger exposure to the S&P and slightly less weighting to Nasdaq 100. Halim Al-Balushi, I hope I pronounced it correctly. You asked quite a few stocks here. Again, I'm not going to go through all individual ones. I wouldn't buy, SCHD and JPQ, probably some that I would consider, but individual shares like Walmart, I would not consider, especially seeing where retail is going. Now being in the Middle East here, I just see that Amazon is going to demolish so many individual retailers. We don't have Walmart here, so I can't judge, but from what I see from a distance in the US and so forth, I think they're doing well, but would I bet on them or Amazon, I would definitely go with Amazon without, again, knowing the fundamentals of the company. It's just that gut feeling, where do I see attention and money flowing in? That's definitely Amazon over Walmart. But again, that's just my opinion without having done much homework on that. Good, guys. Okay, let's do one last question. We have here Epic Gangster Gaming. What if you make a profit with long-term investment, but over the same time the currency has lost value? Then if you sell, you made a loss in the end? Okay, one second. What if you made a profit with long-term investments? Okay, but over the same time the currency has lost value. Then if you sell, you made a loss. Not 100% sure I get your question, to be honest. So because let's say you invest in a company, right? Your $10,000 you invested in a company or ETF, it went up to 20,000, you doubled your money. If you mean that obviously the dollar that you used to invest has lost value, it did to inflation, but that's just the purchasing power, right? It's not quantifiable. You're not going to deduct it from your gains. Unfortunately, if that's your question, you're going to be paying the taxes on the gains that you made. So if you made 10,000 gains from your $10,000 investment, then you're going to be paying the tax on the $10,000 gains. Sure, some of the purchasing power will be less if it's a longer period, but that's not a consideration for your tax payments. Hope I kind of got your question over there. Good, ladies and gentlemen, coming up on the hour. Thank you very much for tuning in. I hope you found it useful. I really enjoy those lives. And if you still have any questions, pop them in the comments below. I'll still get back to them afterwards. And other than that, we'll do another live stream next week. Maybe Wednesday, probably a better day. I think Friday may not be the best day for most of you guys as you're starting for the weekend. I have a very exciting weekend coming up myself. Tomorrow, I'm going to my I've been for a while, but a long time I haven't been to F1, finally, to Abu Dhabi, the last race of the season. Obviously, I'm a big F1 fan, so that will be exciting. I'm planning to do a vlog maybe. I think it might be fun to kind of, a day in the life sort of, maybe less finance content related, but just, kind of share the life here in Dubai, share the F1 experience, and hopefully it'll be interesting. And on that note, wish you all a beautiful weekend. Thanks for tuning in. And as always, stay healthy, get wealthy, and I'll see you in the next one. Ciao.